Good day, YouTube. This is Jay Money with Falling Foot Financial. Just a Warren Buffett video here. I've talked about him quite a few times on the channel here. I'm in Omaha, same place as Warren Buffett, so always like to cover his stocks from time to time. But this is his secret portfolio. He's been piling into these two stocks. A little bit older article. Didn't get it done over the weekend, but still find it relevant. So, Oracle of Omaha has created more than $610 billion in value in shareholders since 1965. Due to an acquisition 24 years ago, Berkshire owns a specialty investment company with $5.92 billion in assets under management. Secret portfolio heavily invested in these two stocks in the second. Berkshire's quarterly 13F filing won't give you the full picture regarding Buffett's 5.9 hidden portfolio. So there's the Berkshire A. I think last time it was about 420,000 last time I looked at it. You can buy partial shares of that on Robinhood. You can't on Schwab for some reason. Must be something behind it. But I have bought partial shares of this one in Robinhood, and the Berk B last time I looked was around 300. I haven't looked at either one of them for a while, but he has a track record of making his shareholders richer since becoming CEO in 1965. He's overseen the creation of more than $610 billion in shareholder value and delivered an aggregate return for his company's Class A Berk A of 3,641,613% as of the end of 2021. For context, that's 120 times the return of the benchmark S&P, including dividends paid over the past 57 years. Because the Oracle of Omaha consistent long-term outperformance, Wall Street professionals and everyday investors wisely pay attention to what he's buying and selling. Warren Buffett is a hidden portfolio and probably don't know about. Generally speaking, riding Warren Buffett's coattails is pretty easy to do. Money managers with at least $100 million in assets under management are required to file Form 13F with the Securities and Exchange Commission no later than 45 days after following the end of a quarter. 13F provides an under-the-hood look at the brightest minds in Wall Street. We're buying, selling, and holding in the most recent quarter. Since Berkshire Hathaway is sitting on a mammoth investment portfolio worth almost $341 billion as of 6/2/22, Buffett's company is required to file a quarterly 13F. Thanks to the filing, investors have been able to track more than 1 dozen stocks Buffett and his team have purchased and added to this year. In 1998, Berkshire Hathaway acquired reinsurance company General Re, sounds like General Lee, for the tidy sum of $22 billion, while the reinsurance business's main reason for purchase, General Re also owned a specialty investment firm, New England MEAM. Based on New England Asset Management latest 13F, Buffett's hidden portfolio absolutely piled into two stocks during the second quarter. I've talked about this once or twice here on the channel before. Chevron had a nice run up there. I sold out of this one a while back. It's currently at 161.63. I'd had it for a couple years, just barely made a profit on it. I got into it for the dividend. Back in 2017, it did run up. I did make a little bit of profit, nothing to brag about, but this one just didn't move as much as I wanted it to, so. But market cap of $313 billion, days range of 161.57 to 162.81, 52-week range of 93.31 to 182.40. Chevron is the first big buy in oil Chevron, which jumped from just 0.15 of NAME's assets at the end of March to 5.26 of its assets on June 30th. All told, Buffett's secret portfolio purchased a little over 2.09 million shares of Chevron in the second quarter. As a reminder, Chevron is the third largest holding by market value in Berkshire's investment portfolio. New England Asset Management likely piled into Chevron on the expectation the crude oil and natural gas prices will remain well above their historic averages for a long time to come. For more than 2 years, the pandemic has created unparalleled demand uncertainty for energy stocks, which in turn has led to reduced capital investment in drilling and infrastructure. To add complications, Russia invaded Ukraine in February, and there's been no sign that resolution to this conflict is near. However, Chevron's being an integrated operator, and another reason the world's most successful investors are buying its stock, in addition to drilling and exploration segments. Integrated operators own midstream and downstream assets. Midstream assets such as pipelines and storage facilities typically operate on fixed fee or volume-based contracts that produce highly predictable operating cash flow. Chevron also arguably has a best balance sheet on any global oil major. Chevron sports to a debt-to-equity ratio of 17%, generated nearly $40 billion in operating cash flow over the trailing 12-month period, ended on June 30th. This affords the company the financial flexibility to dole out a 3.6% yield, repurchase up to $10 billion worth of its stock this year, and potentially make earnings accretive acquisitions. Next is HP, the second stock secret portfolio piled into during the second quarter, of personal computing and printer solutions provider HP. A lot of you might have known HP by its former Hewlett-Packard, which the company changed to HP in 2015. Without question, HP is the New England Asset Manager's second buy. The roughly 16.3 million shares purchased increased the stake from 0.08% at the end of March to 9.12% just 3 months later, so quite a difference. On one hand, HP is contending with near-term sales weakness tied to its PC and printing segments, as the vaccination rates have ticked up and employees have begun to return to the office. Demands for the PCs and printers have tailed off. On the other hand, PC sales or printing solutions have historically produced a reasonably predictable operating cash flow from year to year. Even with this rough patch, HP anticipates reporting adjusting earnings per share of $4.02 to $4.12 in the fiscal 2022, with free cash flow of between $3.2 billion and $3.7 billion this year. So right now it's at $28.48, so at the $28 billion market cap, a range of $28.45 to $28.75. It's about a 30-cent swing in there if you wanted to trade it. 52-week range of 26.11 to 41.47, so a little bit of appreciation in there. Even if investors make an assumption that HP's revenue declines by a low single-digit percentage in fiscal 2023, cost-cutting measures and ongoing share buybacks should allow the company to report around a $4 full-year EPS. This works out to a forward priced earnings, a ratio of less than 7, a PE ratio of low for a company, a substantially high cash flow could make for an intriguing value investment. What's more, HP's management team fully understands the importance of rewarding shareholders, and with the company quarterly dividend was increased by 29% last year. The current yield is 3.6%, and it fully explains HP's aggressive share buybacks. And the investment team appears to love dividend income and share repurchase programs as much as Warren Buffett. So like I've said before, a lot of the stocks that he gets into pays a dividend. I mean, if you look at his history in Coke, I think they say he still hasn't ever sold a share of Coke. And I think last I heard makes about $100 million just off of dividends a year just off of Coca-Cola alone. So a lot of his holdings are in dividend stocks. So that's got to say something. That's why I talk about dividend stocks from time to time here on the channel, as well as growth stocks, REITs, and MJ, and pretty much try to cover it all. So, but those are just the two Warren Buffett's getting into, Chevron and HP. So if you have either one of those, go ahead and list it in the comments, along with your cost basis, any other information you'd like to share. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, this is J Money, Falling Forward Financial. Happy trading, happy investing, stay green. Cheers.